I'm wondering if there's sort of palpable excitement on the ground there in Tokyo. There are higher expectations from the BOJ after those wage increase numbers on Friday.
Yeah, I wouldn't say there's palpable excitement for the raising of borrowing costs. But again, it's something that has been primed to happen for quite some time now. Again, Governor Ueda at the Bank of Japan has been considering all the indicators. Some would say that he perhaps would wait until the April quarterly economic report. But again, all indications that we got from him in January, the last time we were here, the last time the policy board met, was that there was still a little bit of caution. Wanted to wait and see if this was a sustainable, virtuous cycle of inflation that is backed by those wage gains that you talked about. And sure enough, the latest numbers that we got on Friday from the Rengo, the Federation of Trade Unions, essentially blew the numbers out of the park. 5.28% average securing deals for those companies represented by those trade unions, which is much higher than what we saw a year ago at 3.8%, which was already the biggest set of wage gains in some 30 years. So the numbers, I guess you could say, would bolster the case for the first time the BOJ to exit negative rates in 17 years. But there are still a number of different economists who say, why not buy a little bit more time? Wait for that economic report in April. Does it matter between mid-March and late April to hike? That's only the real question right now, essentially, because all the major news media over this weekend, whether it's the Nikkei, the Nihon Keizai Shimbun, or Kyoto News and others, all reporting it essentially as fact that tomorrow, at the end of the two-day meeting, Governor Ueda and the board will decide to end negative rates.
Yeah, just talk us through, give us a sense, really, Steve, of the camp that's saying that we need more time. How big is that, and sort of how prominent have those voices been? You just mentioned what else are they waiting for, but just share a little bit more context on that.
Yeah, I mean, again, some economists, including Bloomberg Intelligence, is indicating that perhaps now is not the time. We're going to have a guest coming on in the next half hour or so, a former BOJ board member who says now is not necessarily the time. But again, we have to see what else comes with it, whether the scrapping of the yield curve control completely, whether there will be a scrapping as well of the policy of buying ETFs that essentially was a backstop to the equity market. But the equity market now at 38,000 plus, just as recently as March 7th, over 40,000. Do they need to continue to be purchasing exchange-traded funds? And also, of course, the JGBs. That's another indication of whether, Ueda wants to send a signal to the market that they're going to continue an accommodative policy despite exiting negative rates. One way to do that would be an indication that they're going to continue with the JGB purchases.